Good weekend, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this is the end of a quarter, end of a week, September 29th, 2023. And today we do our weekend charts. In other words, it's all weekly charts. And we'll try to get a picture on it. But there's a lot going on. The UAW, they're expanding the strike now against us. Stellantis this time is not in. They got a get out of jail card, monopoly money. They're on the sideline. Now it's Ford and GM are back into the foray. I imagine down the road GM will get out of and get a card to get out for a week. Who knows? But they keep expanding it out. And, what they want, the union, they want that money. You know, I don't know if they're at 36%, 30%. It'll vary. The problem for the automakers is they're not at the point where they can reduce a lot of staff at this time because they're not selling that many autos that are fully electric. That's the reality of the situation. I would think if the mix were 50-50, they'd have an easier go of it. But they're not going to get a reduction in staff right now because they're years away. Ford, because of the pressure that all this is putting on it, they've stalled the building of a battery plant that they need, but they'll stall it out. You got to count your chickens, got to see where you're at and where this whole thing's going to end up. And at the end of the day, it's a numbers game. And as nice as it is when Mr. Fain says that the heads of the companies got huge increases, and he's right on all that, by the way, that's them. That is not the rank and file all the way through. But his argument is, and it falls on my ears, all these buybacks, some of that money could have been given to make better salaries for the workers. I agree. But nobody said during that these workers don't own stock in the company and they're not getting better dividends and seeing their appreciation. It's complicated. It's always complicated. But the companies are not going to saddle themselves again with pensions. They've gone that route. They've gone bankrupt. I can't imagine they're going to do it. Could they? I'm not running the company, but I don't see it. So that part, you had that increase. Then, of course, the inevitable, the showdown and the shutdown of the U.S. government. Now, this has been coming a long time. Congress is dysfunctional. We know it as Americans, and they know it. All of them in Congress. They thank God they're politicians, right? Now, the amazing part is some of them were really successful business people, and that always throws me for a loop because doing that, knowing that, working that, how could they end up in politics where everything's dysfunctional? And yet they do. So what we are is shut down. And the argument, it starts with the head dysfunctional person, President Biden, who today comes out and says, oh, no, any bill you give me that gives more money for the border, I'm not passing. I will veto it. Well, there's your no-starter for a beginning because that's the one thing he could have counted on to get the Republicans, the dysfunctional party, to at least agree to get something that maybe the Senate would bite on. Head dysfunction and president of dysfunction. All right, so we're going to be there for a long time fighting that battle. We had a good piece of news come out this morning in that the PCE number, that first number, the price fell back under 4%, the increase, another inflation number. That's good news, okay? That's the first time. That's one of the Fed's key things that they look at. The problem is they're not going to be able to get to the next set of numbers if we're closed down. I hate to say it, you're not going to get a jobs report next week. You're not going to get the reports you normally get. You're sort of flying blind now. You can guess what things are from private reports, but government reports starting at midnight, well, actually I should say 12:01 a.m. Sunday, will be shut down. I don't believe in miracles, so I don't believe that Congress can get anything done and that it's all going to happen hunky-dory and everything's going to be fine come Monday morning. You can, I'll be the opposite way. So that means that the market has to digest a lot of things. All right, we go back to charts. That's, to me, it. Now, I decided to do Walgreens because I had a bad experience at Walgreens, and I decided, let's take a look. I'm not the only person having a bad experience at Walgreens. So let's not get that Ira's picking on a company. Does this look to you like they've been doing well? So what they've done is they have gotten rid of their current CEO. They have brought in one that is much better from everything I'm reading. He's got experience. They like what they're seeing. And the stock did rally 5% for the week. I'd give it a hurrah, no question. He's got his hands full. My experience with them is you go in, you wait 30 minutes in a line to be told they don't have the product available and or other events happen. And you go, why do I have to wait 30 minutes? We're understaffed. Why are you understaffed? Well, the company isn't hiring enough people. They've cut back on staffing. So we have to wait 30 minutes to be told. By the way, they will send you, if you on a Walgreens app, oh, you have an appointment. This is the time to show up. My first set of that 2 weeks ago is I showed up on time and then was told they didn't have a certified pharmacist on hand to give a shot. You tell me you couldn't send me an email to say, don't come in, reschedule. We have an issue. The second one, I'm waiting in 30 minutes. I get up. This is at noontime. And they tell me they're out of the COVID medicine. And I go, okay, so that's 2 for 2. That tells me they don't know what they're doing. I did call corporate office, and I did complain. Do you think I heard back anything? Of course not. This answers. If you can't handle your customers, what happens? They go elsewhere. I don't need COVID shots from them. There's plenty of other places to get it. This is Chicago. But it just shows you when they make money on that. Okay. So we come here. It's been a big slide. The market has just gone from 31.22. This week, it hits 20.58. So it fell just recently. A pretty big amount. That's a third. So they're doing a heck of a job. You've been under the 18-week average of closes for a long time. Not a very pretty picture there. The market has hit and got under the Bollinger Band, and it's only moving to the right-hand side of it, and it has an embedded reading. So the welcome I have for the new CEO is this. I really do hope you put it together, and customer service is really important. On this rally, though, until the red line closes over 21, there's going to be guys that are telling clients, go short to see what happens. And when you lose the rating over 21, you can't be short anymore. Maybe they get their house in order. But right now, that's not the case. In Microsoft, oversold, no trend, higher high, lower low. What you're really doing is you're trading between the upper band to the lower band. In addition, is the bloom for the moment off AI? Because Microsoft, Google, NVIDIA, Planter, they've all been coming down. Why? I don't know why. I'm giving you what they've been doing. But I think it had to do with this boom in AI, and now the market's coming into it is going to happen when. There's a difference of, is it going to happen? I fully believe AI is here. I believe that it'll keep getting better and better. But a lot of money's got to go into it to make it better. Today, ChatGPT contacted me. I can have voice stuff, and I tried it. It's cool. It's real cool. It's not completely working right, but it's cool. And I'm using it. If I have a question on things, I'm doing it already. I know we're using it on formulas as I'm building another prop formula to trade that I've been doing. And we had to get off it for 2 weeks, but we're right back on it Monday. And we're using a lot of AI with it and asking questions and getting help from it. I'm using it on the websites for keywords to try to draw more traffic. So this stuff works. Now, does it get applied right? Does it prove that it's all going to work? You've got to work through it. It's like any new thing, but it's cool. All it is speeding up of databases we've all got and now mixing in a way where you can actually talk to it and it talks back in a voice that doesn't sound like a computer. It's so neat. But it's early and you're void of a trend right there. In KRE, regional banking, I don't see how the regional banks do well in this world of high and going higher interest rates. I'm not saying that Larry Fink and Bill Ackman know what they're saying, but I believe it, okay? I can't tell you that they're going to be right, that interest rates in the 30-year bonds going over 5%. They believe it. They believe interest rates are higher for longer. I believe it. And why? Because the debt. It doesn't take a genius, okay? How do you fund the debt in America if you don't start cutting back? And if you don't cut back and all you do is say, well, I need more money for this and that, where does it come from? And you got to pay interest on it. Well, as you pay interest on it, you keep feeding that. And who else is buying? You don't have China out there buying the way that it used to. They don't want American debt. Japan's not buying the way they used to. It's Americans that have to buy it, or others that we can attract to it. And the way you attract them is pretty simple. You increase yields. Well, if you keep increasing yields, you're just chasing yourself. You never can get rid of your debt. Got a credit card full of it? Try paying it off. You'll see what I'm saying. And at 24% interest rates today to 29, it's hard. Lower highs, lower lows, MCHI. Oversold. I don't want to own anything in China. The country doesn't work right now. Xi has changed everything. You saw what's happening with the developer. Evergrande strikes a deal, looked pretty good to keep them going, and maybe you buy 3 years, and all of a sudden their securities commission says, no, you cannot issue more stock. Why not? Now if that deal tumbles, it's a domino. It's one after the other. You go in and own that. And how can you own companies there where the game changes on you all the time? Remember, at the end of the day, they're a communist nation. And everything, if you do well, we saw it in Alibaba and Ant, if you do well, they come in and they change the game on you. So for a brief period's okay, but I'm not excited about that. XLI. Bearish, but now I'm getting to the point where I look and I say, okay, you look at 99 and a quarter, the 100-day average to the Bollinger Band, short covering area. Doesn't mean you can't go lower. Support in the chart there, but a bearish chart. Now, XLE is still bullish. If the red line closes under 79, it spells to me a correction, maybe back to the 18-day average. I think this is a key week we're in coming up right now because the market's trying to lose that number. The fact is you're at an 81 reading. You closed in not the bottom part of the range, but you did close down. You have to go up to keep it up and keep it up. Otherwise, I think you go back to the 85, 80 level. I'd be a little cautious. UUP and the dollar. Come on, the dollar's king. We're the best of a terrible world. And labor, did you see the jobless claims and all? I mean, come on. If you want a job in America, you got it. Even with all the immigrants that are here, we got to get them all working. Okay, we do have to get them all working. That takes them off the city rolls. Higher high, lower low. Gold holding up here in 5% 30-year bond numbers, and that means you're going to be what, 6% plus in other numbers? Watch out. Okay, that's a big number. If inflation is falling, the real rate of return picks up. So no, you're not going to get rich on that. I want to make that clear because inflation's eating into other things. But gold pays nothing, and I don't understand the story behind gold in this economy. That's my problem. I'm a chartist at the end of the day. So whatever I write on, all that's fluff. The chart action right now is what? A higher high, lower low. You broke through the first support of the 100-week average that we haven't been at since back here in March. If it gets another thrust to the downside, watch out below it, 169.34. Let's get to the next chart here, Tesla. So Tesla's Tesla. I mean, you know, it's a genius, guys. I love seeing Elon Musk on the border wall. I mean, this man's smart, all right? Whatever he touches doesn't always turn to gold initially, but it seems to get there over time. Higher high, lower low. I don't see a trend right now. I see a market that's waffling back and forth at this point. Uber, a bear market bounce. That's all it was off this. Why is it bear? Well, because I'm wrong. It's not. It's still bullish. You should have a bullish bias here until you're under that 18-week average. Close under it, then I want to be in the bear camp. I'm not there. You had a market that had an embedded reading. It lost it. If you take my course, it's supposed to go down to the 18-week average. It did it. and now it's adjusting. Now, to get bearish, all it need do is take out not this week, but last week's low, goes under that number, and you do open the door up then for the lower band wherever it's at currently at 40.20. In DRI, Darden, the reason I put this back up, and remember I told you, I am convinced that you're going to see these companies hurt. Students got to start repaying their loans right now, beginning of October. They probably eat at Darden restaurants because it's all kinds of restaurants. I think they're going to get hurt with all that. I think that as you're looking at things, you watch. I think that restaurants are going to hurt now. This is their season, but I think people are going to yank in a little bit if they don't feel they have the money. And watching the government shut down, watching strikes on TV, you got to get a little bit nervous. And you don't have to think I'm right. The chart is saying I'm right. It's been straight down. This is market 175. You just fell $35. I mean, that's a big break. I didn't say there's anything wrong with the company. They can't change the environment. In Google, this is part of what we were just talking about, that AI needs to run its course a little bit. So you lost the embedded reading. 18-day average is probably the near-term goal. I put it all together, try to come up with ideas. By the way, silver was one of the wildest trades of the day I've seen in a long time. Look at my metal report. You'll see it covered there. So what are you going to do for your information now that the government shut down? Because you're not getting things from them for maybe a long time. We cover so much. We are part of what you would say, think of it this way. Every ETF that's based on the futures markets, and there's a ton of them, we're the guys that write about it. We talk to you the cash market, the derivatives. We talk to you what the spreads are doing, open interest, volume, all that in there. So if you're looking for information, one of our reports will do it. Charts. You want to turn to your charts right now. The charts will guide you through this market without these reports. You want to trade with the trends if there is a trend there. How do you do it? Take some of the courses. Get onto the price counts that we have. Take the charting software. We have 2 versions of it. Take a look at it. It's just time. It's free to look at. We're not going to ask you for a credit card. So how do you get all this information? There's a slew. This page just goes down. Move your cursor to the top. There's an icon, or go to iraepstein.com, free offers. In the meantime, enjoy your weekend. I'm going to enjoy mine. I'll see you come Monday. At least I'm through now for the next 60 hours. No more looking at the market. Sunday I'll look again. You take care.